Hi, it's Joel Frank here, market analyst for YouTrading, and in today's video we're just going to be doing a quick market update, taking a look at how things have been playing out as we approach the middle of the trading week. First thing that I should talk about, let me show you the charts actually. Let's get Alphabet or Google up first. You can see that Google's down about 7.5%, and MSFT, Microsoft, is down a similar margin. Both of these big US tech behemoths reported their Q3 earnings before the market opened on Wednesday, and both of their earnings were basically worse than expected, and their earnings growth outlook was also weaker than expected as well. So this initially weighed on the US equity indices, but you can see that actually the S&P 500 this morning, we've had the market open about half an hour ago and it's pretty much flat. Why is that the case? Well, we continue to see this trend this week where markets are sort of moving towards pricing in a slightly more dovish Fed. Okay, let me just show you the dollar index real quick as well. The dollar index is coming under some pretty heavy selling pressure still. It's sort of breaking through some key areas of support. We'll go through the currency markets in more detail in a second. But pretty much this week, this latest earnings that we've had is contributing to US growth slowdown fears. We've also had a batch of data this week, which is contributing to US slowdown fears. Like we had the flash PMIs, which were worse than expected on Monday. Oh, it hasn't actually come up here, but since the start of the week, we've also had a fair amount of US housing data as well, which has been pretty bad. And all of this data points towards the fact that that the aggressive rate hikes that the Fed has already done seems to be having an effect. And that effect is slowing US growth. So now we're talking about the Fed potentially being a little bit less hawkish going forward. Yes, they are going to go ahead with their 75 basis point rate hike, uh, at the start of next month. Yes, they are going to then continue to raise interest rates, but maybe at a slower pace and maybe not as much as markets have been fearing. That is the thinking at the moment, anyway. So yeah, you got the S&P 500 here, so comfortably holding in the mid 3,800s. Like I was saying, I think if oh, my arrow's not working. Oh, there it is. I think we can probably continue to crawl higher, maybe have a look at this 4,000 level. If these trends of uh, expectations for the Fed becoming a little bit more dovish, and the earnings season being strong. I know Microsoft and Google earnings were bad, but aside from those two, and those two are really important, but the smaller companies, the banks, the other, major but smaller companies that have reported generally have been better than expected. So, if the beating expectations rate remains high, because it's been about 75% at the moment for US companies, then I think we can probably continue to crawl higher. But anyway, yeah, let's return to currency markets because we're seeing an extension of these moves, like I've just said. We'll start with euro dollar. We were in this downtrend for a long time, but boom, we're above it now. And also, guys, remember we were also talking about this pennant structure, which, the upside break of which has really played out nicely. We're at 1 month highs, we're above this key area of resistance, and above parity again. That's an important thing to note. Um, and it looks to me like we can probably test 102. Um, we talked about earlier in the week a couple of the fundamental things that are boosting the euro at the moment, such as the fact that gas prices have been coming down. Europe remains warm, good weather still, which is easing energy crisis concerns. Of course, I also said earlier this week, but I'll repeat it again. That can change very quickly. If we get a cold snap in Europe in a couple of weeks, um, you know, that could push gas prices higher again. That could weigh on the euro. Potentially, we get more escalation in the Russia-Ukraine war. Like there are loads of things that could happen that could weigh on the euro. And just quickly, this Eurozone data, like look at that German data, 45.7 manufacturing PMI, 44.9 services PMI. So, we're still talking about Europe being in a recession, which is why, my trade idea that I was talking about yesterday was uh, potentially looking to sell rallies when we get to more attractive levels, or if we get to more attractive levels, like this resistance or this resistance. But anyway, here we are, we're pushing higher. So is cable. Cable's back in the 115s, broken above an important resistance area around here. And actually, you can scroll back and probably mark up that pandemic low, which was closer to 114. That was a sort of balance area that we had been struggling with. Well, now we're above it, so now we can start talking about the next area, balance area, which is around this 117.50 area. UK's got a new PM. Looks like things are going to be steadier, more boring, no extravagant fiscal plans going ahead. Rishi Sunak, he was he was the former chancellor that took the UK through the pandemic, and he had these plans to raise taxes a little bit on corporations and individuals. So it's all very well, the thinking is that it's all going to be very fiscally responsible. Obviously, the UK's got a lot of challenges, and the outlook for the dollar still remains strong. So, are we going to break out of these sort of longer term downtrends that we've been in? We're going to have to see. I think it's probably unlikely. Um, but anyway, we shall see. What else we got to look at? Let's have a quick look at oil, as we always do. You can see oil's been consolidating, pushing a little bit higher today. The dollar's been weakening a lot, which does help oil. In terms of news on the oil front, there's nothing massive to speak of. I think the main driver remains the macro story. And I still think you're looking at downtrends like this, which we're probably going to stay in for now. Um, Although we're going to have to see how things shape out, because you've always got wild cards like the supply side of the equation, what Russia and OPEC and all of them could do. But then you've also got the wild card of what the US potentially could do with their strategic reserves. Because you remember it was OPEC that sent oil higher in early October, and then it was Biden and an oil release or chatter of an oil release that sent oil lower again. So yeah, we'll be monitoring things there. But anyway, guys, that's pretty much the video. In terms of quickly before I wrap this up, in terms of what we've got coming up, Bank of Canada today, that's probably going to be a 75 basis point rate hike. Then you got the ECB tomorrow, also probably going to be a 75 basis point rate hike. US Q3 GDP, that'll be an interesting one, but it is backward looking, so you know, don't take too much into it. But yeah, we talked about the US being in a recession in the first half of the year, so has that carried through into Q3? Markets seem to think it won't have. We're going to have a 2.3% quarter-on-quarter growth rate, but we'll have to see. Then we've got Bank of Japan. They're probably going to remain ultra dovish. Canadian GDP. This is a more interesting one for me. US core PCE. Obviously, US inflation remains a key driver in markets at the moment, core inflation in particular. And this is the Fed's favored measure of core inflation. So, if we're still talking about this remaining very, very hot, then we could still be talking about a very hawkish Fed. Then we just got a bit of housing data and some final US consumer sentiment data. So yeah, that's pretty much the rest of the week. I hope you guys enjoyed the video, and I'll see you all in the next one.